This is Scott Becker with the Becker Private Equity and Business Minute podcast. This is a brief discussion of individual stocks versus mutual funds or index funds. We're reminded when individual stocks have great volatility, how we should look at individual stocks as maybe part of the fun part of our portfolio or the explore part of our portfolio versus the core part of our portfolio. When I look at yesterday, stocks like NVIDIA rise 14%, Beyond Meat rose 13%, Wayfair dropped 23%, Domino's fell 12%. The reality is most of us as individuals have very little insight as to what's going to happen with these companies. And we'd be far better off with a very broad base of stocks. For me, that means investing almost exclusively through index funds. I do have a handful of individual stocks. It's a total mix as to whether they do good or bad. But unless you're going to own 50 individual stocks, pick a number. I don't know what the right number is. A professional money manager could tell you that right number. You're probably far better off in index funds, which are a low-cost way to invest in a broad swath of the market, or in mutual funds, which are a more expensive way to invest in a swath of the market. Again, we view it as this core and explore concept of investing. The core ought to be an index fund, a mutual fund, or a very broadly diverse set of stocks. And then the explore can be certain things you're having fun with. It could be Bitcoin, it could be individual bets on stocks, et cetera, et cetera. And of course, some people have done incredibly well on picking individual stocks, but they're ultimately few and far between. Thank you for listening to this version of the Becker Private Equity and Business Minute podcast. Again, the discussion between individual stocks versus index funds and owning a broadly diverse swath of the market. Thank you for listening.